Sir, you can join us directly on the dais, please, sir. Sir, you can join directly on the dais. I also invite other dignitaries to the dais. Shri Dinesh Kumar Khara, Chairman SBI. Shri Ajay Kumar Chaudhary, Executive Director, Reserve Bank of India. Shri Atul Kumar Goel, Chairman IBA and MD and CEO Punjab National Bank. Shri Sunil Mehta, Chief Executive, Indian Banks Association. Namaste and a very good evening to our distinguished guests, speakers, Chief Executive Officers, Managing Directors, Executive Directors, members of the Managing Committee and our fellow members of Indian Banks Association and all other senior officials representing banks, Reserve Bank of India, fintechs and the media fraternity. I am your host Mukti from Indian Banks Association and I feel extremely delighted to welcome you all to IBA's first ever conference on India's digital rupee journey. Going by the Indian tradition, to invoke the divine blessing, we will now have the ceremonial lighting of the traditional lamp. May I now request Shri Sunil Mehta, Chief Executive IBA, to lead the dignitaries for the lighting of the lamp. Thank you, dignitaries. May this glowing lamp lead us to healthy, peaceful, and prosperous times, and may we look forward to an enlightening session. May I now request Shri A.K. Goel to welcome Shri T. Ravi Shankar with a bouquet of flowers. May I request Shri Dinesh Kumar Khara to welcome Shri Ajay Kumar Chaudhary with a bouquet of flowers. Thank you. Ladies and gentlemen, at the outset, I would now like to invite Shri Sunil Mehta, Chief Executive, Indian Banks Association, to welcome the distinguished guests and dignitaries. Over to you, sir.
A very good evening to all of you. Honorable Shri Ravi Shankar ji, Deputy Governor, Reserve Bank of India, Executive Director, RBI, Shri Ajay Kumar Chaudhary ji, Chairman IBA, Atul Goel ji, Chairman SBI, Dinesh Khara ji, MDs and CEOs of various banks, officials from RBI, officials from banking sector, my friends from media, ladies and gentlemen. You know, this conference on central bank digital currency with the name India Digital Rupee Journey, Learnings from the Pilot and Way Forward. It's a great journey, and we as Indians are proud of it because in the world, I have attended an international banking conference. I think our regulator is way ahead in introducing it, going for proof of concept, because Europe, it is yet to even kickstart and rest of the countries. So a great journey initiated by RBI and led by DG Ravi Shankar ji. So a round of applause for the RBI. In the last few years, India has been the forefront of digital payment innovation, especially with UPI drawing the attention of the whole world with its scale and rapid adoption. Rupee, in its new digital avatar, is the latest in the line of innovation that the regulator and the government rolled out. Union Budget 2022-23 announced the launch of Digital Rupee, and Finance Act 2022 made amendments to Reserve Bank of India Act 1934 to expand the definition of banknote to include the banknote issued in digital form. In October 22, the Reserve Bank of India released a concept note on central bank digital currency to explain the objectives, choices, benefits, and risk of issuing the CBDC in India. Subsequent to this, RBI initiated pilot project for the test and uses of the digital rupee in wholesale as well as in the retail markets. This is significant because central bank digital currency is disruptive in many aspects. The first, a wholesale CBDC pilot, that is CBDCW, began in November 1, and other, the retail CBDC pilot, it was launched on December 1. The CBDCR is meant for the private sector and the Indian citizens. The wholesale CBDC are restricted to financial institutions, are meant to improve the efficiency of interbank payments. CBDC is expected to make interbank market more efficient. Settlement in e-rupee can reduce transaction cost by preempting the need for settlement guarantee, infrastructure, and collateral to mitigate settlement risk. We are all aware that cryptocurrency is one thing which was attracting the attention of the entire world. And our Indian regulator has taken a very cautious approach by banning that. And that has now proved the entire world that our Indian regulation systems are far better than the rest of the world because they could not regulate, and here we have preempted it. And now the failure of some of the crypto exchanges across the world has proven that the Indian decision was right. And I'm really happy to share with you, most of you will remember that it was in an IBA event when Ravi Shankar ji came personally and announced that yes, crypto we are not going to encourage, and he narrated the merits and demerits, and at that point of time, everybody was bullish on cryptos. Nobody thought that they will have this fate, which every regulator is now thinking how to put a curb on it and how to go for it. So India is not only leading in innovation, it's not only leading in technology, it is leading in regulation also. And I think we can be proud of our regulator, and there cannot be a better person than T. Ravi Shankar ji himself coming to us and telling us the way forward about the CBDC framework that RBI has created for the country. So I would not like to take much of the time. On behalf of IBN as well as on my own behalf, I welcome all the dignitaries, all the participants in this, and I hope our today's deliberation will be equally exciting as of the last event. Thank you all for your presence today, despite your hectic schedule.
Thank you for setting the tone for the session, sir. May I now invite Shri Dinesh Kumar Khara, Chairman, State Bank of India, to deliver this special address. Over to you, sir.
Thank you very much. Very good evening to all of you. Honorable Deputy Governor, Mr. Ravi Shankar ji, MD and CEOs of various public and private sector banks, representation from the fintech industry, print and digital media. First and foremost, I thank IBA for giving me an opportunity to address all of you on this very important topic, which is central bank digital currency, with special focus on learning from the maiden pilot which has been run on this particular product and the way forward. This, of course, is a digital bank note, much better than the crypto, where there is a claim on the Reserve Bank of India or the central bank of the countries. Of course, retail and wholesale is something which we have tried out because the scale differs. In case of wholesale, it is merely the participants in the financial markets who have currently participated and have witnessed the success of this instrument. In retail, I would say that the scale has been significantly large, which has given an opportunity to many of the ecosystem players to actually have the flavor of what the e-rupee could be. Central banks around the world are exploring whether CBDC could help them achieve their public good objectives, such as safeguarding the public trust in the money, maintaining price stability, and ensuring safe and resilient payment systems. CBDC could ensure that as economies goes digital, the general public could retain access to the safest form of money, a claim on a central bank. This could promote diversity in payment options, make cross-border payments faster and cheaper, increase financial inclusion, and possibly facilitate fiscal transfers in times of economic crisis, such as the pandemic which we witnessed. In the Indian context, CBDC can offer a variety of advantages to an already growing digital payment ecosystem and reduce the cash load of the economy, reducing the impact cost in equity, debt, commodity, and the forex market. Interest in CBDC has grown in response to the changes in payment, finance, and technology, as well as the disruption caused by COVID-19. Just to highlight a few trends, a few days back, Swiss National Bank announced a wholesale CBDC pilot. The Bank of Italy has launched a pilot to assess the viability of CBDC. Thai Bank are collaborating with the Bank of Thailand for similar pilot. Monetary Authority of Singapore, Hong Kong Monetary Authority, Reserve Bank of Australia, Federal Reserve, Bank of England, People's Bank of China, they are all in foray at various stages. But happy to share that Reserve Bank of India took the lead and they have shown the way to all the regulators across the globe. The list is actually expanding daily, and the outcome of the Indian experiment will be of vital importance for others, because anything which happens in India, it happens on a scale, so which is actually not seen across the globe. Moreover, IMF is also developing a platform to bring interoperability to CBDC, which could be an important agenda under the Indian presidency of G20. Let me now share with you some of the outcomes of the maiden pilot, which we have actually started in the month of November, when we launched the wholesale CBDC, and in the month of December when we came out with the retail. Initial pilot was designed to be carried with 9 participating banks and at 4 geographies for the retail segment, involving a close user group of merchants and retail customers. For the wholesale segment, the use case for maiden pilot was settlement of secondary market transactions in GSEC. CBDC's wholesale pilot clocked a daily average of INR 325 crore in November 22. When it comes to the settlement, the settlement was done on a T+0 basis, so which was actually quite remarkable in terms of the wholesale experience. In the retail segment, the use case was to offer features of physical cash like trust, safety, and settlement in digital mode. It can be held or used to carry out transactions similar to manner in which currency notes can be used in physical form. The pilot project aimed to test the robustness of the entire process of the digital rupee creation, distribution, and retail uses in real time was something which is very remarkable. The project is currently testing the use cases on transactions from person to person and person to merchants. The pilot started with CBDC availability for around 50,000 users in the retail segment, of which 5,000 are merchant. The retail CBDC pilot project recorded significant amount of transactions in the first 2 days of the launch itself. So that is a very clear reflection of the interest being evinced in this new product. In terms of aggregate value, the circulation is around 10 crore plus as far as the wholesale e-rupee is concerned, and 5.70 crore as far as retail e-rupee is concerned. I would also like to articulate some of the challenges which were faced when the CBDC got launched. Firstly, of course, it goes unstated that behavioral shift is the biggest challenge in the retail segment, and to convince the wider public on the value proposition is something which we all stakeholders need to deal with. The Nigerian experience suggests that even when there is a shortage of physical cash, the CBDC adoption can be low. The Caribbean experience is also similar, but for different reasons. Closely linked to behavioral aspect is the issue of anonymity. There are talks that a special law may be required to convince the public, else CBDC value proposition will be viewed with a lot of circumspect. Secondly, what would be of importance is the issue of connectivity. The first pilot run was in urban centers where there was no issue of internet connectivity. The new 5G network rollout is primarily in urban centers. Therefore, the subsequent run needs to cover the rural areas before the final launch. The current pilot has no user experience in rural areas, which we need to actually test. And I'm quite confident the way we have seen the penetration of the mobile phone across the geography of the country, I'm sure there would be solutions for that also. Now I would like to briefly touch upon the approach going forward, given the initial experience with e-rupee pilot and the mixed cross-country evidence. It appears that the rollout of the wholesale segment will be easier than the retail segment, because for banks that are informed entities, it is easier to adopt as compared to the individuals. The scope of e-rupee could be expanded in the wholesale segment by including the settlement of primary auction in GSEC on NDS. We may include buy-side entities such as pension fund, trust, NPS, EPFO, insurance companies. FII participating in the debt segment and mutual fund also could also be roped into the ecosystem to use the e-rupee. More so in the closed user group, I'm sure there would be much better response, and that itself will cover a very significant component of the wholesale settlement market. Use of CBDC in settling of rupee-denominated external debt, which constitute 30% of the external debt, can also be envisaged as one of the potential area for using e-rupee. Including corporate businesses and B2B payment is also a logical extension in the subsequent pilots. Issuing CBDC salary accounts can be given an option to employee who wish to transact in e-rupee. Use of CBDC in rupee settlement with countries such as Sri Lanka and Bhutan can also be explored. Expanding the use of CBDC could also be explored into B2G and P2G transactions. These may include payment of advance taxes, property taxes, interest payments, or small saving and pension payments. The issue of interoperability standards is more of a long-term issue and relevant for cross-border settlement of claims. It may be advisable to expand the scope of pilot by including entities in the gift city. In the retail segment, issues are more complex due to the status quo bias, and there is no straight solution. However, we may think of extending the e-rupee to retail secondary market transition in cash segment, mutual fund purchase, and even property transactions. The use of digital rupee may also be considered in RBI retail direct account, as it offers T+0 settlement. From the perspective of retail segment, the Chinese experience suggests that interoperability with private payment system can also set the stage for future cooperation with other private firms such as e-commerce platforms like ONDC, etc. RBI has already indicated that CBDC QR codes would be made interoperable with UPI mechanism, further providing a range of offline payment methods around the core CBDC also appears to be a pre-adoption situation. Targeting the cash on delivery segment of e-commerce platform, which is as high as 30 billion in value terms and account for 25 to 30% of the total transaction, can also be a good segment to explore. I would like to say that CBDC as a value proposition will have many takers in future. I expect that the wholesale segment can grow much faster than the retail segment, and even in the retail segment, there are enough opportunities where we can actually try out the CBDC and it can be very well received. A carefully designed incentive structure can also help in the transition in the retail segment in particular. I thank you all for taking out time and to be with us on this very important topic. Thank you.
Thank you for your insightful address, sir. Ladies and gentlemen, I feel absolutely honored to now invite Shri T. Ravi Shankar, Deputy Governor, Reserve Bank of India, sir, 1 minute, to deliver the keynote address. But before that, a quick brief about him. Shri T. Ravi Shankar is a career central banker. Thank you, sir. His current areas of responsibility include reserves management, public debt management, payment systems, IT infrastructure, currency management, and foreign exchange management. Sir has served as a consultant to the IMF on developing government bond markets and debt management. He has represented RBI on international forums like Bank for International Settlements and various internal and external expert committees and working groups. Sir, it is indeed a privilege to have you with us today. Please, over to you.
Good evening, and that felt nice. So. In fact, I had lunch with many of you today, and I don't know, but in the average life of a banker, half a day spent in the central bank, coming out and then having to listen to a central banker for a pre-dinner is is probably not an ideal day, I expect. I'll try to keep it light. I'm sure you have already had a heavy session earlier. So we'll try and keep it light, and the work has been made easier by my previous speakers. Coming to the formal speech. Chairman IBA, Mr. Goel, Chief Executive, Mr. Mehta, Chairman SBI, Mr. Khara, ED RBI, Mr. Chaudhary, all MDs and CEO of banks here, and fintechs, and other participants, members of the media, and my colleagues from the Reserve Bank of India as well. It's a privilege to be speaking in this IBA event on a topic which surprisingly nothing much is happening globally in terms of actual activity, but a huge amount of discussion and meetings take place on the topic. So last 1 year I might have had, let's say, 10 meetings with international organizations, and they keep asking, and I get tired because I just have to repeat the same things. Not much has changed, since 3 months back when we talked, that sort of a thing. But then, as Chairman Khara said, this potentially could be a game changer to the financial market. So we have to be careful in the way we proceed. So it's important that we actually understand what the product is and we take our forward steps accordingly. Thank you, IBA. I think the first time I spoke on the IBA platform, as Mr. Mehta said, was on cryptocurrencies, and my crypto friends were not happy. I spoke once after that here, I think in Trident itself, and some of my banker friends were not happy. I spoke on the UPI, so they're not happy. So I've made it a point that today I'll keep everyone happy. There won't be anything negative. Coming to the issue, I mean, all of us know that we are going through a general fintech revolution that is changing the entire landscape of financial markets. As I have told earlier, in a couple of other meetings or speeches, these changes are largely in the nature of change in processes or delivery of financial products. The basic financial products remain the same. There is still the loan, there is still a deposit, there is still a payment instrument, there is still an insurance product. It's just the way that we process these products, the way that we identify potential customers, the way that we evaluate the customer, and the way that it is delivered that has changed. So fundamentally, this is important to keep in mind. A narrative that goes somewhat against this is that of cryptocurrencies. So they say it's not just the process, but the product itself is new. This product did not exist. A closer scrutiny, as I've dealt in more detail in my, in my crypto speech, a closer scrutiny reveals that that may not exactly be the case. The innovation in cryptocurrencies is essentially, if you read the white paper of Satoshi Nakamoto, the innovation, the title would, the very first sentences would be a peer-to-peer transfer network. It is a transaction. It is a transaction protocol that enables authentication of transactions in the absence of a trusted intermediary. What he means is a bank, typically, in our system. So that is what is, that is what is the key innovation there. In fact, if you read the history of blockchain or history of authentication, you would actually see that right since the 80s, people have been trying to solve this problem of what they call double spending problem. That how do I ensure that the same digital instrument is not spent twice? How do I authenticate transactions? So that is what the innovation is. The innovation is not cryptocurrency itself. Cryptocurrency itself is not inevitable to a blockchain. A blockchain can exist even without cryptocurrencies, and it can perform various other tasks. So, and then closer look at the currency itself reveals that it's neither a currency nor an asset nor anything that the way we understand. Now, this is something that looks straightforward to me, but it is very difficult to establish globally because you would see, global agencies or central banks or anyone writing about this typically refer to them as assets. And you ask a question, what kind of an asset is it? Is it a financial asset? Then please tell me a financial asset which doesn't have someone who has issued it, which isn't someone's liability. So how do you define it? So that issue actually tells us that while cryptocurrencies technologically is an innovation, the innovation is that of the underlying blockchain or the distributed ledger technology. The innovation is not really in the currency. And that brings us to CBDCs, effectively. Why? Because the basic use cases that were shown to justify cryptocurrencies, apart from decentralized finance or taking away intermediaries, which is not something that's going to happen very soon, is that it can do the functions of currency, functions that other payment instruments which are largely based on deposits, which are largely based on transfer of money from one deposit account to another deposit account. Now, it is an improvement on that. Now, why CBDC is important? Because CBDC shows that its features, it's a currency, so it has the features of a fiat currency. It's a digital, it is digital value, so it also has the features of a bank deposit, which is largely digital these days, so it can be transacted. So, compared to currency, the anonymity that currency has, that can also come to CBDCs. Now, given all this, given the fact that its character as an asset or a currency is not in doubt, unlike that of cryptocurrency, plus it can do everything else that another cryptocurrency can do because it's a digital currency, shows that the narrative around cryptocurrency is best addressed by ensuring that CBDCs establish themselves in the financial system. This is one of the main reasons that we actually proceeded, we actually went ahead with the introduction of CBDCs in India. This was one of the main reasons. I thought I'd just give you a bit of a background on that. It has various uses. I think some of them have already been identified, a lot of use cases. Some questions that were asked, for example, one question I'm often asked is from the point of view of a user, what exactly is the difference between using UPI and a CBDC? Very good question. The answer is, from the point of view of the user, not much. As far as the user is concerned, it gets the same instantaneous transfer. Not really bothered because it's a transfer. It doesn't really matter whose liability it is. It's a bank liability, that's deposit, or a central bank liability, that is currency. So from that point of view, no, it does not matter. But having said that, we are only thinking in terms of what we are used to now, which is we are thinking UPI. And then saying, how is CBDC better? It's not, from the point of view of what UPI can do. But then we have to understand that unlike UPI, which is a money transfer instrument, CBDC is money. It can be transferred, it can be used as a transfer instrument, but it is also money. So the possibilities that it can have as store, as store of value, are things that you cannot associate it with a payment instrument like CBDC or like UPI or RTGS or anything. Now, these uses have to evolve. They haven't evolved yet. They have to evolve going forward. But then there is that potential that what we are looking for when we are saying we will introduce CBDC is not just a payment instrument, in terms of which it's as efficient as many others, or conversely many others are as efficient as a CBDC transaction, but also as digital money. A simple thing is I can carry 1 million rupees as currency, not a bank liability or a deposit, in my pocket or on my cell phone. It's possible. That's not possible with physical currency. That's, those things. And if we can ensure anonymity, then this can actually exist independent of a bank account, which basically means that I can hold it on some instrument. It can be a card, it can be my cell phone. I can actually hold, like I hold cash today physically, I can hold it digitally without any constraint of space. So the possibilities that it has are many more. Additional possibilities, because it is money, it's not a payment instrument, the money itself can be programmed. In fact, there is a lot of the innovation that's going on in the private money space in terms of programming. We can program that. If you can program, I think I was told that some experiment is already going on in Goa of direct benefit transfers of educational assistance by the government to students. Make sure that it is spent in the accredited educational institutions. You can program it. It can be tried out. Similarly, it can be tried out. An agricultural loan can only be used for agricultural inputs and many others. The possibilities are many. There are many possibilities which we may not be able to think now, but our fintech ecosystem will be able to think of. There are a lot of issues that need answers, that need solutions in the financial system, in India and globally. We all know that our financial systems are very effective, payment systems are very effective. There are still a lot of things that need to be addressed in terms of reach, in terms of inclusion, in terms of global cross-border transactions. There are many, many uses. So all those uses will evolve by virtue of the fact that CBDC is a currency. It is not just a payment instrument. So that is, that would be my answer when someone says that how is it different from a user's point of view? That would be the answer, that its potential is much wider. We'll have to keep that in mind. Anyway, so, with these in mind, we decided that we would introduce CBDC. We went about it in a very, very calibrated manner. We have been looking at it, studying it from, I think, 2017-18. We have had internal groups looking at it. Finally, we decided that we'll start with it. So we took it up with the government. The process started with the FM announcing it in the budget. So, there's a very clear message that government wants it, government wants this, and government wants this instrument to pick up. We followed that with the necessary legal framework, amending the Reserve Bank of India Act, recognizing CBDC as a banknote. Now, this is, this is important because you need a legal recognition, but it's also important from another point of view, which is that we consider CBDC as a digital form of currency or a banknote. We do not look at CBDC as a type of financial instrument, which is different from currency. There are some countries which are saying that on, central banks which are saying that on my balance sheet, there would be currency and there would be CBDC, they would be different. We don't intend them to be different. We might show them differently, but they are fungible, they are currency. Now, which is why we are particularly, just to maintain the purity of its character as a currency, we have said that it cannot pay interest because currency does not pay interest. Now, this is an instrument, CBDC in many jurisdictions is being looked at by central banks as a monetary policy instruments, and therefore they are thinking of, for example, in the euro area, negative interest rates can probably be better administered with a interest-paying currency. But we are not thinking about that. We are thinking that it is just a currency, not any different from the existing fiat currency. I think that point we will always have to keep in mind. Whenever we have a doubt on whether CBDC can do this or not, I think that the basic question is, would a currency be able to do that? I think if any of you ever have a doubt, that is the question to ask, and that's exactly what we have in mind. So we went about that calibrated manner. Legally it was changed, followed up with a concept note in October, as the speakers before me have said, a wholesale launch in November and a retail launch in December of last year. Now the wholesale launch was basically to ensure that our internal systems are all in working order, because it involves changes to RBI's internal system, changes to RBI's accounting system, linkages to banks, and banks should also be able to show that as a separate asset, and so on. And it has to be created, that entire process. So it was a simple, government securities transaction process. We were particularly interested in ensuring that all the networks are working. Then we introduced the retail. Now the basic use of currency is, lies in retail. Not so much in wholesale. Even today, without CBDC, the wholesale transactions in currency are very few. Most of us know what they are for, but otherwise it's mostly a retail instrument. So retail is the key to understand how it will be used. How will the average citizen react to a currency which can be held digitally. Why? Because it's very important. Most importantly, our financial system, globally all financial systems, are bank-centric. So it is the bank which creates virtually all the money that is used in the system. You know, money is bank deposits. It's created by banks. It's not created by a central bank or anything. So banks create money. Banks provide the payment services. Like I said, other than cash transactions, all payments are movements from one bank account to another. So banks create payment systems, and banks provide the liquidity services. In fact, the best definition of a bank I had read long back was an entity which provides liquidity services to the economy. By creating money and by converting short duration liabilities into long duration assets, a bank provides liquidity. Without this liquidity provision, no economy can function. So, so these bank-centric systems that we have, in that bank-centric system, how would CBDC affect bank deposits or bank credit? Is it possible that the population largely shifts to CBDC and doesn't create deposits? In which case, how does a bank operate? How does a bank, give credit? One possibility in an extreme case is all credit therefore has to flow through central bank money. Now that's obviously not a lasting solution, not a solution that anyone wants. We want CBDC to be introduced without any significant disruption to the existing system. Benefits will be taken in terms of payments, in terms of storage, yes, but the banking system, the ability of the banking system to create credit and therefore deposits must also remain in place. We also need to understand how monetary policy transmission, for example, will change if there is digital money. So to understand all this, we have to necessarily follow a path of slowly introducing it, studying it, and taking the next step. Now, which required that, which was the basic reason behind our CBDC retail launch. It takes some time. Banks have to come on board. Banks have to put their systems in place. People have to come to a new system. It was one thing when you didn't have something like UPI and suddenly people see the benefit of UPI and jump in millions. It's another thing when UPI already exists and you try and get customers whose, like I said, whose experience is not significantly different. So, there has to be a separate strategy of acquiring customers into the fold so that they do transactions, we get enough volumes, and then we can study. That is essentially, what we have been focusing on. So one of the things we tried is have 1 million customers by June. We already have 1.3 million customers now. We have about 0.3 million merchants on it. More importantly, we also decided that we would take advantage of the UPI network to increase transactions in CBDC. So we said that there has to be an interoperability of the QR codes used in UPI. Earlier, what used to happen is we would require the merchants to be onboarded, acquired by the banks, and they have to have a separate QR code for CBDCs. Now, we found that if nothing else, it takes a lot of time. And especially large merchants and all that, they have to do a lot of internal process before they actually adopt a new instrument. So we decided that the users of CBDC need not be disabled to do a transaction because the merchant doesn't have it. At the end of the day, it is money. It is convertible into bank deposits. So we decided that we would do the interoperability. At this point of time, what happens is you go, there is only one QR code. You swipe your QR code using your CBDC app. If the merchant has a CBDC account, the payment goes there. If the merchant doesn't have it, it comes back, says merchant doesn't have it. Do you want to do a UPI? Or do you want to pay some, and some other? Going forward, I think by the end of this month probably, we'll have an arrangement. If he hasn't, CBDC, it will settle in CBDC account. Otherwise, it will go to his UPI account and settle. So as a holder, as a customer, I still can do a CBDC transaction. Now, once I get enough transactions, then I would be able to go ahead and study its impact, macroeconomic, and its impact on the banking system, and so on. So how do we get those transactions? I think just like we got accounts, they were going very slowly initially. Then we decided to take the participating banks and tell them that let's make a drive and get more merchants in. It was less than 100,000, I think, by at about the end of April. We got 1 million by end of June. We will try the same thing for getting transactions in. We'll have to onboard banks. I think all the major banks need to be in that space. It is in the interest of banks because they themselves can look at the data and study that data and understand behavior. So we'll have to get more banks in, all the major banks in. We should target roughly about 1 million transactions a day by the end of this year. If we have something like that, there would be adequate data for us to study. 1 million transactions a day is not very high. The transactions in UPI are more than 30 crore a day. It's in fact now about 31 crore a day. So 1 million isn't all that high, but it's good enough for us to be able to study behavior. And it's good enough for it to penetrate and be a top of the mind recall of normal users, normal customers that are there. So that is essentially what we are trying to do, get interoperability, get more transactions so that we can study and assess what it is. Now, while we do this, I think it's equally important that even banks undertake this sort of an assessment as number of transactions increase, because we would be talking to them. They would be, they would themselves have to understand. They would themselves have to understand the larger impact. We will have to understand. It's better that banks and the central bank, all of us study those transactions to to understand how this ecosystem can affect the existing payment system or the existing financial system and make adjustments as and when required. What are the important things that we need to do going ahead? One of the things is clearly anonymity. Now we know the defining feature of currency is anonymity. It's possible in the US to buy, I understand, to buy a car by paying cash. It may not be possible here, but a lot of cash is used for transactions in Japan. Even large value transactions are used. Why? It's not because everyone wants to avoid taxes or that. It's also because cash gives you anonymity, and privacy and anonymity are very, are sort of substitutes to each other. Citizens, if they want to retain privacy, they need to have an instrument. They have an instrument, cash. If we have to provide it in digital form, we have to provide that anonymity. How do we do that? It's very difficult. There are various technological choices. Some choices, transactions can be killed after a certain point in time. Some, there are some other technological choices, but they have to be backed legally. No bank or no central bank or no system will kill a financial transaction unless it is legally provided. So we'll have to explore how it can be backed legally. We'll have to get into conversation with the government. We'll have to ensure at the same time that this is not inconsistent with PMLA regulations, and then ensure that this anonymity comes. One other thing that we were discussing, and one other alternative that we could explore, is if you have in your wallets, if you have CBDCs and it's encrypted, no one can access that. That's another way of maintaining some degree of anonymity. So various technology choices are there. We will have to look, and we'll have to ensure that how anonymity is to be ensured, because that is what will ultimately make it cash. The second issue that we will have to address is offline. How do we transact it offline? Now, offline transactions is as much of an issue for other payment systems like UPI. We are also trying there. So that has to be, to that extent, it's also relevant to CBDC, but it's also relevant in another sense, which is that if if I have to do transactions on my wallets, I would need the ability, for anonymity's sake, to be able to transact in an offline environment. And transactions can, once it gets online, transactions can be authenticated, but the balance and the names can be masked or they can be encrypted. So that way you ensure anonymity, you ensure that it also transacts in transacts in an offline mode and can be stored in an offline mode. So offline is another thing that we'll have to solve. I'm not sure that we have completely solved the issue of what technology to use. We are currently using a hybrid technology, blockchain for the creation by the system and going to the banks. From the banks down to the wallets, it's a separate normal system. Why? Because blockchains, by their very nature, are not given to authenticating large value of transactions, definitely not population scale. It takes a long time for these transactions to be authenticated. So that is an area where our technology supporters are looking at, but we are also looking at what other technology alternatives can be there. That's something that we are working on. I told you about programmability, programmed money. That is also something that we are working on. What we need to focus mostly on in the area of CBDCs is cross-border transaction. The biggest advantage that we will get in CBDC is in cross-border transactions. Now here I might come a little close to making some of you unhappy, but the current global payment system is operated through the correspondent banking arrangement. And the correspondent banking arrangement that exists has two features, in my view, that that pose sort of or that add inefficiencies to the system. One is existing systems, the fact that there is only these entities through which transactions can go means there is some amount of rent seeking. So the cost of transactions is very high. As per a World Bank estimate, the cost of a small value transaction, remittance transaction, is about 6%. That's extremely high. The one issue of cross-border is, of course, exchange. The exchange margin has to be paid. But the fact that exchange margins have to be 1% or 2% or 3% or even 50 basis points is a narrative that should change with technology. It is not changing, but it should change with technology. We have always been told that a bank has to take the risk. These are very small value. They have to be consolidated into a marketable lot before I can sell, and therefore I run a market risk so that I can charge 50 basis points is not really justifiable. So in cross-border transactions, one is that the behavior of existing entities creates rent-seeking activities and increases costs. That has to be addressed. That's one. The second risk that happens is a large value of cross-border transactions happen through a handful of banks, handful of global banks. A huge percentage happens through a handful of, a dozen global banks maybe. Now, for an international financial system to be stable, it is important that this is spread out across more banks. This is spread out across more institutions. Now, this is where the basic justification is provided for cryptocurrencies. Now, globally, policymakers have largely are basically ignoring non-backed cryptos like Bitcoin and all that for these purposes. But there is still a narrative that globally stable coins, for example, linked to some currency like dollar, can provide this alternative to the correspondent banking system. It can reduce the cost of that system. Now, we have to be careful here. This is an important thing why we need to, we need to have CBDC, if for nothing else, for global transactions, and we need to push CBDC to get, more global transactions done through this. You see, the arguments given for stable coins is that it's linked to one currency and therefore, it can trade. There is no risk in the instrument. The instrument value doesn't deviate from whatever is the peg to a dollar, means it doesn't deviate from this. It's a good thing. It's good. It can actually get you stable coins. It can get you that international benefit. But it's good for the country whose currency is pegged. It's good for US if it's pegged to the dollar. It's good for Europe if it's pegged to the euro. It's good for sterling, UK if it's pegged to the sterling. If it's pegged to the dollar and it's used in India, it's not so good for us. Why? That's obvious. It's not so good for us because to the extent it replaces the use of rupee in the economy, there is a transfer of seigniorage income from India to private issuers of these stable coins, who are largely in a few countries. Now, is it something that is good for a global system? Depends on the point of view, but is it something that we would want sitting here in India? Doubt that. So we'll have to keep that into account. That is one aspect that we have to keep into account. What happens to India's capital regulations if we allow this? What happens to India's monetary policy? If we allow stable coins linked to some other currencies, effectively the usual risks most of you know of dollarization are again back. So if we want to maintain our capital account regulations, if we want to maintain our monetary policy independence, we have to be very careful about allowing these sort of instruments in. So the basic point is stable coins can provide some of this, but they are only beneficial to a few countries whose currencies are linked. For the vast majority of other countries, it is an existential threat to policy sovereignty. That is something that we have to keep in mind, which is why the stable solution is if every country decided to have a CBDC and we develop frameworks where they can interface with each other, transact with each other. Conceptually, just to explain it, if I have to send some money to my relative, for example, staying in the UK, currently I have to go through the correspondent banking system, but if I have CBDCs in India, rupee CBDCs, she has a sterling CBDC wallet, it is very easy for me to go to my bank, buy equivalent CBDC if it is linked, and just hand it over to my daughter. It's like I'm handing over physically. So it bypasses a lot of intermediaries and therefore saves costs. It also ensures that I can do it instantaneously. Cross-border transactions can be instantaneous, can be cheap. This is where most of our focus is, and in this, surprisingly or unfortunately, the competition to CBDC is the narrative for stable coins. So it is important that we in India or other emerging economies or other countries create that narrative, that have an instrument that is equitable. It doesn't benefit some countries at the expense of some others. So that is an area where we will have to work on going forward. I think pretty much all those issues that I wanted to sort of discuss here are covered. I just wanted to tell with a bit of a message to banks that all these are very complicated instruments, very complicated narratives. It requires effort to understand them. Like I said, after I have talked to people 10 times, they still come back and ask me, very basic questions, which is not their problem, which is that it is very difficult for, to make people understand this. And that's where I think we need to have proper public discussions and public debates so that we understand this. Globally, for example, I haven't seen even a single discussion where anyone globally has taken up a cryptocurrency or a stable coin and said that this is money for this reason. This is an asset for this reason. You see, questions are avoided. Therefore, there can never be an informed debate, an informed discussion, so that you reach a right decision. I think that is where, with all of you heading your banks and all that, I think all of you would be speaking publicly, all of you would be interacting in very important groups and meetings and so on. Raise these issues. Let there be a general debate, general understanding. Let people write. Let people write articles or write research purposes, but discuss on television, media, all of them are there. Let it be discussed. And, if we are wrong in something, nothing like getting it out of a discussion and changing your point of view. But not talking about something and just saying that, okay, we go ahead with this, will probably land, countries like us, definitely, but global financial system, in a bit of a muddle going forward. So my request to all of you is that wherever possible, try and generate a debate on it. I'm not asking you to take any view. If one of you thinks that crypto coins is very good, by all means, talk about it, but talk about it. Talk about it in a reasonable manner. Let's discuss, debate publicly, and then reach a solution which will probably be a value addition to our economy and our payment systems. Our payment systems are the best in the world. We can do, even with this, we are probably far ahead of, most others, which is good. We are trying to link even UPI or other payment systems, which is also good. But there are specific benefits of doing it with currencies that we cannot achieve by doing it with bank money. So I think we need to focus our efforts on that. That would be my request to you. Thank you.
Thank you very much, sir, for the detailed and interesting account on the topic, along with relevant examples. It is always a pleasure to listen to you, sir. Ladies and gentlemen, it's now time for interaction and for taking a few questions. I would request participants to kindly confine your questions to CBDC only. You can raise your hands. My colleagues will reach out to you. Okay, so we'll first take questions from the media.
I'm from ET now. Sir, you mentioned about the discussions around CBDC, and one of the questions which keep coming from stakeholders, especially from customers, is the incentive about the CBDC. You have clearly mentioned that there is not going to be any interest which is getting paid on this currency, but is there any manner that you are going to incentivize banks or any other incentives which you plan when the final launch of CBDC happens? Because Mr. Khara also mentioned in his speech that there should be some incentives for CBDC. Is there, it is planned from RBI side, if you can clarify on that?
No, we're not talking incentives, we are not thinking incentives, because from our point of view, it is important that, we are not competing with anything. We are not competing with UPI or with NEFT or with IMPay. No, we are not. They are there in their own right. They serve a purpose. We believe that CBDC serves a purpose which is different from all of that. We'll have to reach that. And the best way of reaching that is by letting people understand what it involves, not really incentives. So we are not thinking incentives. But having said that, Now, for an entity like a bank, if it has invested resources into anything, UPI or CBDC or anything, it wants more volumes, it wants more business, and therefore it wants to show that as a viable business proposition. Then what it can do will be left to itself. But from a policy point of view, it will not, we will not try and give any added benefit to CBDC through incentives. Eventually, any payment system or any instrument will survive if it survives as a value proposition for the people who sell it and for the people who use it or buy it.
Okay, thank you.
May I? Okay. So, if you can hear me. You said that you're planning to make payment through QR code, CBDC payments through QR code interoperable with UPI. If you can once again repeat what is the timetable, and you want to do 1 million transactions in a day, in a month, what is the goal? If you can repeat it. The second thing, any progress towards the legal basis for anonymity? Any conversation has started with the government? And third, you have frequently expressed this displeasure that banks are rent-seeking when it comes to cross-border retail payments. As you say, 6%. Any move to ensure that they charge us less?
My short-term memory is limited to one question, so so I might ask you to repeat it. So on the first question about interoperability, I understand most of the 13 banks have already done the partial interoperability, where the QR code can be scanned, a UPI QR code can be scanned. If it is there, the CBDC account is there, it will go to the wallet. Otherwise, it will come back with a message that there is no CBDC wallet. That's the position now. I understand the work is apace to ensure that by the end of this month, this would be complete. In other words, when you scan it, it will go check for CBDC account. If it's there, that will get credited. If it's not there, it will go and credit the bank account through the UPI rails. So I understand, by the end of this month, that should be in place. More importantly, for it to be really effective, all other banks have to have those systems, because this is not just every single bank which is participating has to develop that, and also the other banks. Right now we have, I think, about 13 banks. We need to get all other banks. Top 20, 25 banks should be on that system. So they might take a little bit more time. It depends on the individual bank. But otherwise, for the banks which have already started this, it should be done by the end of this month. That is what is my understanding. In terms of targeting transactions, I just said 1 million out here in the speech. It's not a policy decision that we have taken. But what I was trying to say is that we should target for a fair number of transactions. And I thought 1 million by the end of the year per day is high enough for us to know, understand and study, but not that high that it cannot be, achieved or something. So that is the, point there. Coming to your third question on cost of cross-border transactions, globally there are a lot of efforts through G20, FSB, CPMI. There are a lot of efforts at reducing it, and hopefully it will, it will succeed to some extent. But I suspect that using the current infrastructure, which is correspondent banking system, will have limitations on how much success we can achieve. You see, at the end of the day, if a transaction has to go through 6 banks, the 6 banks have to charge, right? They cannot give it free. So there would be, that cost would, so we need to have product solutions, use CBDC, for example, or technology solutions to reduce those costs, reduce the number of counterparties through which it goes, reduce that cost, and obviously reduce the cost of conversion from one currency to another, which is a separate issue entirely, but I believe that can also be done very efficiently through technology. Now you have to remind me your second question. Legal anonymity is something that we have to work on. We had discussed it earlier, but right now we are focusing on getting these numbers. So we haven't taken it up with the government, but that's something that we need to, we need to work on going forward. If it has to be currency, the issue is known, but we haven't taken it up as such.
So what is the situation now? What is the number of transactions which are processed by CBDC right now?
Not many, but would you have some idea? About 5 to 10,000, I'm told.
Right now,
That happens now.
Right now.
So that happens.
Also, 31st March figure, the RBI annual report said the currency in circulation total, wholesale and retail, was about 16 or 17 crore. So what is the number now, and where do you see it by the end of the year?
The number we will, whenever we give out, we'll give it out, publicly through our website. But that number is not very high. A lot of those are transactions from one person to another. And that number is not very high. You see, we can have 1 million transactions a day, and end of the day outstanding could be very low. Because typically what will happen is, even if I'm transacting in CBDC, it doesn't earn me interest, right? I will do the transactions, and unless I want to hold it for some purpose, specifically as currency, end of the day I will transfer it to my bank account. In all likelihood, banks will provide a facility of sweep. End of the day, whatever is there is swept into here, because at least I earn interest there. So don't go by outstanding and transaction volume in case of CBDCs. But that's something we'll have to see. We'll have to see how behavior, how people behave, whether they actually end up holding or not holding, and so on. You see, one of the things I'm keenly, sort of trying to find out is, assuming everyone uses CBDC, the currency I carry in my pocket is no longer really required.
Right.
I don't have to go and withdraw 5 or 10,000 every time from a, from an ATM. So will it lead to a fall in currency in circulation? These are important things that we'll have to look at.
One last thing, sir, about the merchants. How many merchants are there now in the pilot, and whether online merchants like the Amazon and Flipkart or Swiggy, will they also come on board during the pilot project?
All can come on board. I think we have about roughly 300,000 merchants now, already onboarded.
And online merchants?
But then again, you don't have to worry about merchants, because with interoperability, it means that any merchant who is on the UPI network can actually be used to do the transaction.
Right.
So these numbers are not that significant.
Right.
Sir,
Thank you.
Vishwanath from just a two-part quick question. Firstly, on the programmability side that you mentioned, isn't it also true that if you start specifying how that money is going to be used, then you suppress the usability of that money or interest in that money? That's the first part. And the second one I want to ask you, the RBI so far has been very clear on its stance on crypto, on cryptocurrency specifically. Today you mentioned that if you like it, you should talk about it when advising to the bankers. So are you inviting debate with the intention of changing your mind later, or is this just keeping it as an open forum?
First on programmability, it's important, because your question is important, because we need to understand that distinction. A currency can be used for any purpose. No one writes on the currency that this can only be used to buy rice, right? In that sense, a currency should be completely flexible, should be enabled to be used for any purpose. The objective of programmability is not to affect that feature of the currency. The objective of programmability is that if a father gives 50 rupees to his to his child to go and buy a book or something specific, if there is some way the father can ensure that this can only be used for a book, you are not actually affecting the character of the currency. You are ensuring that your objective of using the currency is achieved. There is a fine distinction. Under no circumstance will currency itself will have limited uses. That will not be there. But if for some purpose, if government wants to give you money, then it gives you money under conditions, it can ensure those conditions. There is that fine distinction. On your second question, I just want a discussion. All I said was, let's talk about these things, so that, unfamiliarity with the concepts will go away. I'm not saying specifically for anything. On crypto, my idea, at least so far, is very clear. So far, I have not got a single response which says that it is an asset for this reason or it's a currency for this reason. In fact, I have gone out of my way to ask people who make these statements, important people. I have asked them, and they generally tend to avoid. And there was someone, I said, give me any example of a financial instrument which can be called an asset, which is not anyone's liability. He told me cryptocurrency. Okay, so this sort of this is not informed debate. So all I want is debate, so that everyone knows. In the absence of debate, it's advertising which decides. In USA, a lot of these people, Tom Brady and Matt Damon, and all of them are now, I think Kim Kardashian, and all of them are now getting calls for paying money because they advertised for this. So if there is an informed debate, you don't have to depend on an advertisement to take your view on what the instrument is. So that is all I was saying.
Sir, I got 2 daughters. How can I ensure that my money, even CBDC in my wallet, will pass on to my daughters or to me? At least now I can say bank account, if no nomination, it will go to debt at least. But what about this?
I've got nothing to do with the crypto. You can open a trust, I guess. so no, nothing to do. But then, I can understand what you're trying to ask. But supposing, supposing you can actually store large amounts of money as cryptocurrency in a wallet which can be seen on which can be accessed through your phone, or in a card or something, you can do that. You can hand over those cards. You can program those things that this is what will happen to this. How that programmability will be done, I have no idea. But it is probably possible. But if you have a simple solution like opening a trust, I suggest you do that.
Okay, we can take 1-2 more questions from the media. From the media.
So, Mayur Shetty here from Times of India. So, yes, sir. So, the explosion in UPI happened largely because, of these non-banks on the issuer side. They spent like several $1 billion in these transactions. So, do you plan to allow non-banks also to hold wallets in future? Also, from the anonymity side, since banks are required to submit cash transactions report, will they be able to maintain anonymity as long as the wallets are run by banks?
Going forward, nothing is off the table. We still don't know who can, right now banks are providing those wallets. If that works perfectly, there is no need to go anywhere else, which is fine. But we'll have to see how it pans out. I cannot, for example, right now tell you that only banks will be given those wallets, because I don't know how the future will pan out, how these volumes take off. So if it's required, if there is a benefit to the ecosystem by allowing such wallets to non-banks, then it can be done. But that is something that we'll have to see. Having said that, our basic model of distributing currency, which is that we distribute it through banks, will always remain. The distribution will not be done through to non-banks. The distribution will still be through banks. We'll have to work out, if third parties, non-banks have to be allowed to hold wallets, then something else has to be worked out. The basic distribution will be through banks.
Yeah, sir, this is Anup Roy from Bloomberg. So SBI chairman mentioned about interoperability, that IMF is working on something that will ensure interoperability between CBDCs. And interoperability of CBDC is also a major problem for this before cross-border transactions can be availed. Sir, as central banker, as a pioneer central banker, and what is your estimate, like when will this CBDC be the mainstream currency for the world? You know, it will take 1 year, 2 years, 10 years? And also, can you please shed some light on this IMF platform that?
No, what this BIS and there are many others are working. What they are basically working is they are looking at CBDC to solve the problem of cross-border transaction cost and time. That is what they're looking at. Now, which essentially means that both countries, or in case of, or general cross-border, all countries have CBDCs. That's number one. So that is the first hurdle to be crossed. Now, once all countries have CBDCs, the next hurdle that you need to cross is that each CBDC system should be able to talk to the other CBDC system and should be able to move money to the other system. Now, for that, there are many architectures possible. Obviously, a central architecture, one system controlling everything is probably not desirable, which means you will have to work out global standards, API standards and other standards, governance standards for, for communicating between two CBDC systems, messaging standards for moving money between two CBDC systems. Now, those standards have to be worked out. Once those standards are worked out, then different CBDC systems, in a sense, become interoperable. They can talk to each other. So that is essentially, what he must have meant by saying interoperability. But that is essentially what global agencies are talking about now and discussing now.
Okay, one
hi, sir.
request before we take this last question. After this session, we'll be having DG sir will be having an interaction with bankers and fintechs. So at that time, you all can please raise your questions. So we can take one last question now from the media.
Good evening, sir. Ekta from Z Business. Sir, abhi.
I'll come back to you.
Okay.
सर अभी आपने मेंशन किया यूएस का एग्जांपल देके दैट किम कार्डेशियंस ऑफ द वर्ल्ड उनको पैसे वापस देने पड़े सो इन इंडिया आल्सो वी हैव अ ओन वर्जन ऑफ किम कार्डेशियंस इन फॉर्म ऑफ फिल्म एक्टर्स और इन्फ्लुएंसर्स जो क्रिप्टो को बहुत सपोर्ट करते आए हैं उनके लिए भी क्या आरबीआई ये चीजें बंद हो एक रेगुलेटरी फॉर्म के साथ कुछ रूल्स और रेगुलेशंस लेकर आए क्योंकि लोग इन्फ्लुएंस में आ जाते हैं पैसे बहुतों के भारत में भी डूबे हैं एंड माय सेकंड क्वेश्चन सर इज लाइक वी आल्सो टॉक्ड अबाउट दैट CBDC ड्यूरिंग द पायलट प्रोजेक्ट द रूरल एरियाज वर नॉट पार्ट ऑफ इट सो इज देयर एनी वे दैट यू आर ट्राइंग दैट CBDC शुड रीच एवरीवन वो वॉलेट कैसे सब डाउनलोड करें एंड इंटरऑपरेटिबिलिटी की जब हम बात कर रहे हैं तो दोनों वॉलेट्स किस तरह से इस्तेमाल होगा उसकी अवेयरनेस घर घर पहुंचे बिकॉज राइट नाउ पीपल आर यूज्ड टू UPI एज यू आल्सो मेंशन सो दे आर नॉट इवन अवेयर ऑफ CBDC इन अ वेरी क्लियर मैनर दैट हाउ इट शुड बी यूज्ड
Now, which is answering your second question first, which is what was one of the objectives of my talking here, that talk about it publicly, spread the understanding about the instrument. Let there be a debate, public debate and discussion, everyone will understand. But that is on top of the efforts that RBI is doing, that efforts that all the banks involved in the pilots are doing to spread awareness about the project, to spread understanding about the project. Eventually, it has to be, it has to be a joint effort by the regulator, by the banks, by other entities, intermediaries involved in it, by the media, to to sort of ensure that a proper understanding of the instrument is made before a lot of people jump into it. On your first question, my request is, to everyone is, don't attach the names. I just told it in a
sir, because they are
lighter veins, but the basic point I was trying to make is that all those issues are now going on, globally in USA and in other places. My point was that we need not depend for our views on, on an advertisement or one thing, any one thing. We should look at a debate, look at various, different views before forming our own opinion. That was the purpose when I said that we need to have a debate.
No, sir, my question is that debate is a separate thing, but like in the US, that these celebrities were asked to return money and even, their law asked them to act on it. So in India, we do not have a law in place where, our own version of celebrities and influencers, when they influence people, they do invest in wrong products, as a result of which many have lost their money. But technically, these influencers have millions of followers, and right now, social media influencing is much bigger than we all expected.
Yeah, but that, you might have a point there, but I wouldn't have sufficient understanding of the existing laws to be able to comment on that. What channels are open or whether someone has lost money. I do not have that information or that understanding. Globally, that's what is happening. Presumably, their laws allow it, and presumably, that is how they operate. What would happen or what can happen in India is, legally is not something that I'll be able to clarify to you. Yeah.
Thank you.
आपका धन्यवाद, बहुत बारीकी से आपने सीबीडीसी को समझाया और उम्मीद करते हैं कि भविष्य में भी जैसे जैसे चीज़ें आएगी आप इसको जानकारी देंगे। सर, जो इंटरऑपरेबिलिटी की बात की है आपने कि जो क्यूआर कोड होगा वो मर्चेंट के पास एक ही होगा, तो क्या उससे सीबीडीसी का जो है उसकी विजिबिलिटी कम नहीं होगी? क्योंकि जब तक कोई कंपल्शन नहीं होगा लोग उसको एक्सेप्ट नहीं करेंगे। इंटरऑपरेबिलिटी जो है उसका एक ये प्रभाव भी हो सकता है जिसमें आपकी सोच अच्छी है, लेकिन जब वो उसकी विजिबिलिटी नहीं होगी, जो पेमेंट करने जा रहा है उसको एक ही क्यूआर दिख रहा है, जो नॉर्मल कई सालों से वो यूज़ कर रहा है उसको पता ही नहीं, और वो मर्चेंट से पूछेगा भी नहीं भाई आप ई रुपी लेते हो या सीबीडीसी लेते हो, तो वो उसको जो प्रोग्रेस होनी चाहिए उसको एक हैम्पर कर सकता है। और सर, जो होलसेल सीबीडीसी के हर किसी के लिए, क्या हम उम्मीद करें कि अगले साल तक ये पूरी तरह से रियलिटी बनेगा हर किसी के लिए? बहुत बहुत धन्यवाद आपका।
सवाल सही है, क्योंकि ये चीज़ डिस्कशन में भी आया था कि अगर आप यूपीआई के साथ इंटरऑपरेबल कर दें तो फिर बैंक्स का जो एफर्ट रहेगा ऑनबोर्ड करने के लिए फॉर सीबीडीसीज, वो एफर्ट फिर बंद हो जाएगी और ये सीबीडीसी सिस्टम पे आएंगे नहीं। बट उससे फिर डिस्कशन में ये हुआ कि अल्टीमेटली अभी भी कोई मर्चेंट करता क्या है, आप जब उसको कैश पे करते हो वो दो चीज़ करता है वो कैश से जनरली। एक तो वो कैश रिटर्न करेगा, कोई और कुछ ट्रांजैक्ट किया वो एक्सचेंज करेगा, छुट्टा वापस करेगा, जो भी करेगा, और वो नहीं हुआ एंड ऑफ द डे वो अपना बैंक अकाउंट में रखेगा। कुछ लोग कैश रख सकते हैं बट जनरली बैंक अकाउंट में ट्रांसफर हो जाएगा। मर्चेंट के लिए उतना फर्क नहीं पड़ता है सीबीडीसी अकाउंट हो ना हो, एक्सेप्ट दैट मर्चेंट एज अ यूजर उसको कैश चाहिए होगा किसी कारण, एंड मान लीजिए कैश का बाकी सब फीचर्स है वो सेव कर सकता है। तो सीबीडीसी का पॉपुलैरिटी इस पे डिपेंड करता है कि मैं सीबीडीसी यूज करूं ना करूं, उतना उससे ये फर्क नहीं आएगा कि मैं कौन सा ऐप यूज कर रहा हूं और वो पैसा सीबीडीसी अकाउंट में ही जा रहा है कि सीबीडीसी से कैश जा रहा है। जब कैश अकाउंट में जाता है इट्स लाइक सीबीडीसी इज डिपॉजिटेड इनटू डिपॉजिट अकाउंट, तो सीबीडीसी का वैल्यू कम हो जाएगा। बट द यूसेज बेसिकली डिपेंड करता है जो कस्टमर जो है वो यूज करता है। ये जब हम सोचे तब सोचे कि अभी शुरू कर देते हैं, फिर आगे जाके देखते हैं बिहेवियर कैसा होता है। आप जो बोल रहे हैं वो हो सकता है, बट आगे जाके वो फिर देखेंगे, स्टडी करेंगे, फिर कुछ चेंज करना हो तो तभी सोचेंगे।
थैंक यू।
सुने, जैसे मैंने बोला स्पीच में कि सीबीडीसी का ज़्यादातर यूज़ रिटेल लेवल पे है, होलसेल लेवल पे उसका कुछ यूज़ है, बट मोस्टली क्रॉस बॉर्डर लेवल पे है। क्रॉस बॉर्डर इंटरबैंक ट्रांजैक्शन हो अगर सीबीडीसी में हो तो उसका एफिशिएंसी कुछ और होता है। प्लस होलसेल का सेटलमेंट एफिशिएंसी की तरफ से कुछ बेनिफिट्स हैं. सो वो बेनिफिट्स जैसे जैसे आते रहेंगे उसमें फोकस करेंगे. अभी हम ज़्यादातर रिटेल पे फोकस कर रहे हैं क्योंकि कस्टमर बिहेवियर उसी से डिटरमिन होता है. बट होलसेल में जैसे टोकनाइजेशन ऑफ सिक्योरिटीज़ वो एक चीज़ जिस पे हम वर्क कर रहे हैं. डिफरेंट यूज केसेस पे वर्क कर रहे हैं. बट ज़्यादा एम्फोसिस हमारा रिटेल बिहेवियर पे है. वहीं पे हम डेटा जनरेट करना चाहते हैं. टेक्नोलॉजी दोनों में ट्राई करके देख सकते हैं. थैंक यू.
Thank you very much, sir. May I now invite Shri Atul Kumar Goel, Chairman, Indian Banks Association, to conclude the session. Over to you, sir.
Thank you very much. Very good evening to all. Honorable Shri Ravi Shankar ji, Deputy Governor of Reserve Bank of India, Executive Director Shri Ajay Kumar Chaudhary ji, Chief Executive of the IBA Mr. Mehta, MD and CEO of the member banks, Executive Directors of the member banks, Chief Information Officers, Chief Technology Officers, Chief Digital Officers and other officers from the member banks, senior officials from the Reserve Bank of India and NPCI and the FinTech partners, members from the press and the media. It has been a very fruitful session and I feel privileged to summarize the proceeding of the session and the takeaway from the today's conference. Friends, the main aim of the CBDC is to facilitate the transaction towards the cashless digital economy, which have been and the important objective of the Government of India. The digital currency is being issued by the Reserve Bank of India of initiate to inspire confidence and bestow the credibility in a technology which is still nascent and evolving. The currency will serve as a legal tender in digital form, which can be used as a medium of payment, unit of account, as well as safe store of value, which can replace the use of the physical cash. And as already Mr. Mehta and Honorable Deputy Governor has already explained the difference between the cryptocurrency as well as the CBDC, because it is a legal tender. Globally, around 100 countries are exploring the CBDC at one level or another. Honorable Finance Minister Madam Nirmala Sitharaman ji first announced about the central bank digital currency rollout by the RBI in the Parliament during the budget speech in February 2022. Accordingly, RBI launched the long-awaited CBDC pilot in early November with wholesale segment and the retail segment in early December. 9 banks are participating in the wholesale pilot and the 4 in the retail pilot run. The benefit from the CBDC include the reduced operational cost on printing storage, transportation and replacement of the bank notes, reduce remittance of the cost, particularly for a country like ours, which has the largest recipient of the remittance in 2021, and the Honorable Deputy Governor had also explained in their speech also. By using of the CBDC, there will be a reduction in the lot of intermediaries which are being used as on date for transferring the money from one country to the another country. The digital rupee can ensure the money spent on the government scheme and programs reach the beneficiary and is used for the intended purpose only. A successful CBDC introduction could prove highly disruptive to the traditional banking sector and could simultaneously spur a new wave of the financial services innovation. The bank could innovate the current products and the service across portfolio of the leverage the opportunity offered by the CBDCs, for example, designing the offline payment infrastructure or electronic vault to store the CBDC at large for large institutions. Wholesale CBDC would help bank manage counterparty and the settlement risk while adding to their efficiencies and pricing also. CBDC will reduce the need for maintaining the ATM and arranging the frequent cash replenishment. All the same time, the implementation of the CBDC will also pose fresh challenges for the banks. While CBDC may lead to the higher volumes for cross-border payment, margins are likely to be squeezed. As already Deputy Governor has already told in his speech also. Since CBDC provide a risk-free alternative to the bank deposit, they could result in a shift away from the bank deposits. CBDC can result in a reduction of the transaction demand for the bank deposit. CBDC may also allow fintechs to directly transact with their retail customer without the need for a banking intermediaries. Banks and the other financial services players need to prepare for this new category of the assets class, its impacts on the balance sheet, as well as the customer value proposition and the benefit and risk. The cyber security mechanism need to be further upgraded and strengthened. With CBDC, banks will not only need to evaluate their cyber security risk to ensure resilience against the cyber attacks, but also enforce security of public and private keys. Banks will need to maintain compliance with AMC, AML, KYC, and the custodian-related regulations while adopting and implementing this new technology. I take this opportunity to thank Sri Ravi Shankarji, Deputy Governor, Reserve Bank of India, for sparing his valuable time and sharing his deep insight about the CBDC and showing us the way ahead. I also thank Mr. Chaudhary, ED of the Reserve Bank of India, and also all other dignitaries and participants who have attended this conference and share their experience and the knowledge. I am hopeful that the banking industry under the guidance of the RBI and the Government of India will undertake all necessary efforts to facilitate the adoption of the CBDC and thereby give a boost to the efforts towards the cashless economy in the country. Thank you. Thank you very much.
Thank you very much, sir. With this, ladies and gentlemen, we come to the end of an enriching conference. I request bankers and fintechs to stay back as Deputy Governor, sir, would like to have an interaction with you. And you may also ask the questions which I must have stopped you from asking. Okay. And I request the media to join us for dinner in the adjoining Malabar room, please. My colleagues will guide you. So please enjoy your dinner and have a lovely evening. Thank you very much.